To you, Leanne, your thoughts on the session today?
Certainly was a positive start to the week. This morning we did see a little bit of caution from investors, of course, coming off from those geopolitical tensions that we saw over in the US on Friday. But we did manage to recover some of those gains coming into this afternoon's trade closing up about 0.4%. Of course, last week we saw the best week on the market since around February, which really was boosted by some strong earnings reports. So although I think some of these geopolitical tensions will potentially weigh on our market, I really think that the drive this week will be around this earnings reporting season. We know it's going to be the busiest week with about 90 companies due to report. The best performers today, however, as you mentioned, being that IT space as well as healthcare, both up about 0.9%. And we also saw those consumer sectors, staples as well as discretionary, doing quite well. Discretionary, of course, being led by Ardent Leisure, which came through with a strong result. Really the underperformer for today, however, was that financial sector. And of course, that was being dragged lower by NAB, which really was underperforming some of the 8 other major banks. We still saw some fairly light volumes going through today, about $3 billion. And again, I think that's just investors exercising a bit of caution ahead of our earnings reporting season. But I certainly think if we can continue some of these strong reports coming through, that potentially will push our market even further.
Talking long-serving, if you like, traditional stocks, NAB, of course, not part of reporting season, but trading update. What did you make of the numbers and in particular the market reaction?
James, look, having a look at some of the numbers, I mean, they didn't look all too bad. We saw those cash profits up 7%. We saw expenses down about 6%, although once we did extract some of those UK conduct charges, they were relatively flat. And we also saw bad and doubtful debt charges down about 9%. And of course, that's been a lot of the focus around these banks. But I certainly think that the negative reaction today from investors was particularly around those revenues. Firstly, of course, we know a lot of these banks are struggling to see some revenue growth coming through, but of course those UK conduct charges as well. So we are continuing to see some disappointment and struggle coming out of their UK business. And I really think looking at the outlook for the UK, investors are probably exercising a bit of caution, and there is a bit of uncertainty coming out of there. So I do certainly think that was why we did see the stock falling off today. We know it has been an underperformer in comparison to a lot of the other banks, and we actually do quite like the outlook for NAB in terms of being more of a turnaround stock, particularly looking at those UK operations. We know that they are continuing to be a drag, but we actually do see that there might be a bit of a possibility we'll start to see a bit more positive momentum potentially coming out of FY15. Since the second quarter of 2013, their UK commercial real estate portfolio has in fact reduced by about 57%, and we think that the market won't probably start to factor in a more positive outlook until that portfolio reduces to about 25%. So potentially coming into the second half of 2015, we could potentially see the market reacting again. But overall, we do like the outlook for the stock, and as I said, we do think it looks like a good turnaround story.
Leanne, your thoughts, the outlook for this stock?
Look, it certainly was disappointing numbers today, particularly that impairment charge that came through. So I think we saw the market certainly reacting to that. But I do sort of look at the outlook and exercise some caution, I would think, particularly around the capital expenditure that may potentially be required for some of their future growth. Of course, as you've been mentioning, that falling gold price and copper prices as well, which will potentially continue to have an impact on this stock. And so we do sort of remain cautious on the outlook. We know it's really been underperforming sort of since the start of the year, down about 42%, really coming under pressure yet again today. If we have a look at some of their key focus points, firstly being improving productivity, we saw gold production up 14% and copper production up 7%, which both actually exceeded their guidance. We saw their all-in sustaining costs falling off, down about 24%, and we also saw their capex, which was below guidance. So looking at those points, it does look like they are on track to start achieving some of their focus points, but I certainly think that was overshadowed today by those impairment charges and of course that falling gold price we're continuing to see. So certainly do remain very cautious on the outlook for Newcrest.
Yeah, closed down about 0.8